Natural gas futures saw an impressive performance last week, hitting their highest levels since February. This surge was fueled by robust market sentiment, indicating a balancing market and mixed weekly cash prices. The anticipation of summer weather boosted demand across several regions, while ongoing or completed pipeline maintenance offered additional support. Natural gas flowing to Freeport LNG's export plant in Texas hit a 5-month high. This increase followed the return of a liquefaction train after a brief upset. U.S. gas futures at the Henry Hub benchmark have soared by around 59% over the past 3 weeks, partly due to increased feed gas at Freeport following an outage in late April. Dry gas production on Thursday was reported at 98.3 billion cubic feet per day, marking a 2.1% year-on-year decline. Concurrently, gas demand in the U.S. stood at 64.4 billion cubic feet per day, a 2.7% decrease from the previous year. LNG exports from U.S. terminals were at 13.2 billion cubic feet per day, up 4% week-on-week, indicating robust international demand. Despite this, total nat gas inventories were still up 17% year-on-year and 30% above the 5-year seasonal average. Nevertheless, the upcoming hot weather season will dissolve this surplus at twice the current pace. According to my calculations, the current decrease rate is around 10 billion cubic feet per week. Starting from May 20, this rate should double to 20 billion per week or 80 billion per month. With the current supply-demand ratio, the surplus will disappear in 7.5 months, or by the end of December. However, hotter summer temperatures will expedite this process, potentially allowing us to reach the 5-year threshold much sooner. Moreover, the upcoming start of new LNG facilities around February 2025 should add even more excitement for the bulls. Of course, weather is notoriously unpredictable, but the chances of experiencing both a hot summer and a cold winter this year are significantly higher. If this forecast materializes, it will be a real thriller for the bears this winter, if not an outright nightmare. The market dynamics are set to shift dramatically, and the stage is set for an exciting, volatile period ahead. Traders and analysts alike will be watching the weather patterns and supply changes with bated breath, anticipating every twist and turn in this high-stakes energy market drama. Given the current market conditions, reduced storage increases, lower production, and strong LNG exports, natural gas futures are likely to maintain their upward trend in the short term. However, potentially cooler weather could temper this bullish outlook by reducing the immediate demand for natural gas. In this case, we may see short sellers re-emerge, driving prices down below the 50-week moving average. Nevertheless, I don't think the profit-taking sell-off will be strong enough to change the intermediate trend down. Nonetheless, a significant challenge lies ahead at the $2.70 threshold. Overcoming this obstacle is essential to pave the way for reaching the $3 level, a long-term target that is currently within bullish traders' sight. Thank you for watching. Please like and comment to support the channel. See you in the next one.